World is dropping today, yet still massively outperforming over the past year. Is this just a temporary pullback or an early warning sign? Today we're taking a deep dive into Chevron stock, ticker CVX, and by the end of this video, you'll know whether this is a smart long-term hold or a risky entry point right now. Let's get into it. Chevron is one of the biggest oil and gas companies on the planet. This isn't some small speculative stock. This is a global energy giant with operations all over the world. The company is involved in everything: exploration, production, refining, transportation, and even chemicals. That level of vertical integration gives Chevron a huge advantage. It doesn't rely just on one part of the business. It profits across the entire energy chain. Right now, the stock is trading around $188, down about 2.45% today. Over the past week, it's down more than 5%. Over the past month, slightly negative. But here's where things get interesting. If you zoom out, over the past 6 months, Chevron is up around 24%. And over the past year, nearly 39%. So despite short-term weakness, the long-term trend is clearly bullish. Now let's break down what's actually happening on the chart. Earlier today, we saw a sharp drop, a fast move downward, the kind that usually scares retail investors. But after that drop, something important happened. The price stopped falling. Instead, it started moving sideways, stabilizing around the same level. This tells us something critical. There are buyers at this price. Big players don't buy randomly. When price stabilizes after a drop, it often means institutions are accumulating shares. In other words, someone sees value here. Now let's talk about the real driver behind Chevron stock: oil. Chevron's performance is directly tied to oil prices. When oil goes up, Chevron makes more money. When oil drops, revenue pressure increases. It's that simple. And right now, the oil market is in a very interesting position. Global demand is still strong. Emerging economies are consuming more energy. Travel activity is high. Industrial production is stable. But at the same time, there are concerns: economic slowdown, interest rates, and geopolitical uncertainty. This creates a push and pull effect on oil prices, and that's exactly why Chevron stock is starting to show volatility. Now let's talk about why investors love Chevron. First, cash flow. Chevron generates billions in profit, especially during strong oil cycles. This isn't just revenue, this is real, massive cash generation. Second, dividends. Chevron is known as a dividend powerhouse. It consistently pays shareholders, and for many investors, this is a key reason to hold the stock. You're not just betting on price growth, you're getting paid to wait. Third, stability. Compared to smaller oil companies, Chevron is much more resilient. It has strong balance sheets, global operations, and the ability to survive downturns. This makes it attractive for long-term investors who want exposure to energy without extreme risk. But now we need to talk about the risks, because this is where things get real. The biggest risk is obvious: oil prices. If oil drops significantly, Chevron will follow. There's no way around it. Second, the energy transition. The world is slowly moving toward renewable energy: solar, wind, electric vehicles. Over time, this could reduce demand for oil. Now, this transition won't happen overnight, but it's something long-term investors need to think about. Third, cyclicality. Energy stocks move in cycles. They have strong runs and then corrections. Right now, Chevron has already had a strong run. So the question becomes, are we near the top of the cycle or still in the middle? Now let's look at sentiment. Based on the options market, traders are divided. Some expect the stock to go higher, others are betting on a drop. This kind of mixed sentiment usually means uncertainty, and uncertainty creates volatility, which is exactly what we're starting to see. So now we get to the most important question. Is this a buying opportunity? Let's break it down clearly. The bullish case is strong. Chevron has solid fundamentals. It's profitable, it pays dividends, it benefits from global energy demand, and the long-term trend is still upward. On the bearish side, short-term momentum is weakening. Oil prices are unpredictable, and the broader market is uncertain. So what should you actually do? Here's the honest answer. If you're a long-term investor, Chevron still makes sense. This is the kind of company you hold for years, not days. You're buying stability, cash flow, and exposure to global energy. But if you're a short-term trader, this is a tricky spot. The stock is no longer in a clean uptrend. It's starting to consolidate, and that means more unpredictable movement. You could see bounces, but also sudden drops. So timing becomes much more important. Now let me give you a simple way to think about this stock. Chevron is not a hype stock. It's not going to 10x overnight. This is a slow, powerful machine. It moves with global energy trends, and it rewards patience. If oil stays strong, Chevron will likely continue performing. If oil weakens, expect pressure. It's really that simple. And that's why understanding the macro environment is so important here. This is not just about the company, it's about the entire energy market. So before making any decision, ask yourself, what do you believe about oil? Because your answer to that question will likely determine your outcome with this stock. And now I want to hear from you. Do you think Chevron is still a strong buy? Or do you think the energy sector is about to slow down? Drop your opinion in the comments. And if you want more deep breakdowns like this, make sure to subscribe, because on this channel, we don't just follow the market, we break it down so you actually understand it. See you in the next video.
You can stand under my umbrella.